Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 26th of June 2026. The first chart is the S&P ASX 200 index. In response to the weakness that was seen the previous week, here the market came back and tested for supply. It consolidated. It absorbed the supply that was drawn out because while volume reduced, it remained slightly above the average. So there was supply in the market, but in response to that, spread narrowed. The close was in mid-bar. That suggests that the market was making a pretty strong attempt to absorb the supply being drawn out. Highs of the range up here, lows of the range down here, intermediate level through there, and that's where the market tested this week and recovered back above it. So that was a pretty good sign that the market still has a positive sentiment, and there was enough buyers in the market to absorb the supply that was drawn out in response to the potential weakness that we saw last week. This is the mid-cap sector. It's perhaps a cleaner and clearer chart at this point in time. You've got the breakdown line above coming through here. That's the resistance level, and it corresponds pretty nicely with the highs of the range through there, lows of the range, period of consolidation in response, right up high in the range that we're looking at here. In response to the potential weakness last week, price came back modestly, closed adjacent to the previous bar's low, holding on to that level on reduced but above average volume. So it does suggest that there was an attempt to support the market this week. It really could have stretched lower, at least down to this level in here, but it didn't do so. It held on pretty well. Remembering there's going to be resistance up here, there'll be selling pressure emerge when the market pushes up above that breakdown line. It threatened it last week, but didn't really make a serious attempt to challenge it. It's pulled back just slightly. Buying support does appear to have emerged. That suggests this market will make a second attempt to push through that level when trading conditions are more favourable. This is the small ordinaries index, always a little bit more volatile than the mid caps. You've got the breakdown line above through there and the lows of the range, period of consolidation in response. The market's pulled back to that level this week with an increased spread and reduced volume, about average volume. That would suggest that with the weakness that was seen last week, it wasn't as obvious in this market. This week's response does show you that there was weakness in the market. The market's pulled back with an increased spread. That's the market probably searching for enough buyers to satisfy the sellers in the market. You get these exaggerated spreads sometimes where there's just not enough demand in the market to satisfy the sellers. And that causes the market to pull back a little more deeply than it would have done otherwise in order to find enough buyers to satisfy those sellers. This market's going to have resistance emerge if the market does challenge up against this congestion to the left. And I expect this market will attempt to recover somewhat next week, given reasonable trading conditions. It may not be all the way back up to the highs of the range. It could be, but I expect the market will probably come back into this range here where the market has consolidated previously, sideways. That's the sort of sweet spot, the safe level. This is the financial sector, easily the largest sector in the Australian Stock Exchange by some way. We've got the lows of the range coming through here. Highs of that range through there. There was a breakout. Here's the highs of the overall range where supply was drawn out previously. In response to that supply, the market moved into consolidation mode each time. This was a pullback in response to a change in the interest rate target by the Reserve Bank. And since then, the market's been trading within that bar's range in consolidation mode to start with. Push higher last week. and I would call that an absorption bar this week. The market's pushed higher, faded lower, closed adjacent to the previous bar's close on equal volume. That's probably a absorption bar. There's a mini breakdown line through there, and the market's just attempting to absorb the supply in the top half of this bar and just below this little congestion zone here, setting the market up for an attempt to push higher when trading conditions are favourable. Now, if trading conditions aren't favourable, the most likely response is a test for supply with a reduced spread, where the market dips lower and then recovers. If trading conditions are more favourable, there'll be an attempt to push up, probably to the lows of the range through there, and probably not challenging it immediately, more likely pushing up to that level and then consolidating at that level. This is the ASX metals and mining subsector. This is looking at the mining industry mostly. We've had weakness emerge a number of times more recently, and in response, the market has attempted to neutralise that weakness by dipping lower and recovering. This week, the market did dip lower. It didn't recover. The interesting thing will be, will the market recover like this next week? And whereas these bars were a dip lower and recovery in 1 week, this would be a dip lower and recovery in 2 weeks. So a multi-bar shakeout or test for supply. If the market does continue lower, this is the level the market will probably come back to and test for strength. That's the lows of that bar there. So if the market does continue to find weakness, it'll probably pull back to that level. I expect the market may reverse next week and do that and effectively mimic one of these bars, but over 2 weeks. And that would be a sign of strength for the market if it did so. This is the ASX gold sector, and it did pull back further this week, although it traded pretty much within the range of the previous bar for the entire week. As an inside bar, volume was reduced and back to the average. So it wasn't a significant sell-off. You've got the lows of the mini range through there, and that's where the market's closed this week, right at that level, after testing its lows for strength. And the overall lows of the range come through there. So you can see where the market's traded. There's a little mini breakdown line through there. This is the breakdown line above, the more important one, which caught the market when it was attempting to push higher in response to the strength being seen back here. Now you can see how the market's pushed up to that level. It's pulled back. There was a modest attempt to consolidate there. There was a mini breakdown there, and the market has consolidated since then at that level. It's all pretty logical, which is what you want to see in the market. I expect the market will continue sideways in here, attempting to hold on and not break down, especially if the small amount of strength seen in the actual gold price late in the week this week continues again next week. This market will probably attempt to recover slightly. I don't think it's going to break out above this level, not immediately anyway. It would take quite a bit of strength in the gold price to do that. More likely it'll just trade sideways, holding on to these lows. You've got the lows of the congestion to the left through there, here, and that also corresponds quite well with how the market's trading in there. So this is a relatively strong level. And I expect the market will put up a good attempt to hold on to those lows and not break down further unless there's serious weakness emerge in the gold price. This is the ASX energy sector. It continued lower this week under pressure. Spread did narrow somewhat, volume reduced to the average. So this thrust lower has weakened slightly this week. The market's probably coming back to this level to attempt to consolidate. This is where the market was consolidating previously in the background before pushing higher. Some strength has been seen at this level previously. That'll probably allow this market to make a decent attempt to consolidate in this level. It pulled back to this level this week and it's found some modest support pretty much right at the highs of that range. And selling pressure does appear to have eased as that level was reached, with spread narrowing over the previous bar, which is a breakdown bar, and was confirmed this week with further downside follow through. I expect the market will attempt to consolidate in here and maybe even right at the highs of the range. This is the ASX healthcare sector. It continued higher again this week. There has been some modest support seen over recent times. These volumes are slightly higher than they have been otherwise. They're dwarfed a little because we've got this big volume over here in the background. So they look a little more insignificant than they really are. But the market has respected the lows of this bar, and the market's pushed slightly above it this week. Breakdown line above is there. This is the breakdown bar in response. And the market's making some attempt to consolidate and recover in here. Remembering we have seen this numerous times in the past where the market has made an attempt to recover before it fails again. So we can't get too excited at this point in time. But there is a modest attempt to support this market underway. We'll just follow it for a little bit longer yet and see how it continues and what may emerge. This is the ASX industrial sector, and it also continued to push higher this week. You've got the highs of the range through here. And if we mark the lines in, here's the breakdown line in the background. You can see how the market found some strength back here. It's produced a period of consolidation in response just below this important level. It broke out 3 weeks ago above that level. Then it spent 1 week in consolidation mode, absorbing supply from the left before pushing up to the highs of the range this week. And that's leaving the market in a pretty good place at the moment. I expect there will be a period of consolidation just below the highs of the range before there's any attempt to challenge it. The market's made a pretty good, strong move here after quite a bit of consolidation in the background. I expect it will consolidate below the highs of the range prior to any attempt to challenge that level. This is the ASX consumer staples sector. It's a defensive sector. The market is often attracted to this sector when there's uncertainty across world markets. Highs of the range through here. Some strength was found down here, adjacent to where the market has consolidated in the past. Prices pushed above that level, up to the highs of the range. 1 week of consolidation, and then a push higher and effective breakout above that level. Volume reduced to about the average, so it was genuine trading, and the spread suggests it was genuine as well. The market's pushed higher here on a lack of selling pressure, and that's allowed the spread to be very wide because there was hardly any sellers in the market relative to the buyers, and the market's bought up strongly. When this momentum begins to ease, you'll almost certainly see a period of consolidation in response, something like this bar. And the higher within the range of this bar and the overall push higher, the higher within the range, the stronger the market sentiment is likely to be. What that suggests is as the market pulls back to consolidate, there's buyers just waiting to buy it, keeping the spread narrow and holding it right up high in the range. If, however, the market has to pull back more deeply to consolidate, then it may not be considered weak, but it's weaker than if it consolidated right up high in the range. So maybe it'll come back and test this level for strength where consolidation's been found previously in here. So watch for that. I don't expect the market will continue much higher here. You saw spread narrow over this previous up bar. Volumes reduced to about the average. So it was genuine, normal trading, no hidden issues or anomalies. And the depth and duration of the period of consolidation in response will be an important indication of the underlying strength in this market. This is the ASX consumer discretionary sector. You can see where the market spent some time in consolidation mode back here, effectively building up some strength, possible accumulation down here. There was this period of quite high volumes where the market continued to go sideways. It didn't break down any further. And this was consolidation and possible accumulation down here. A nice strong breakout bar, 1 week of consolidation. The breakdown line in the background comes through there, and I expect there will be some resistance found through here, some supply drawn out from the left. The market hasn't really broken into that level this week. It's really just floated into that level and a lack of selling pressure. I expect the market will probably come back and consolidate at this level prior to any serious attempt to break out above this breakdown line in the background. This is the ASX properties sector, and it did continue higher this week, although spread narrowed considerably and volume reduced, but it remains slightly above the average. That suggests that supply was being drawn out. There was some modest strength found down here, and you can see the market pushed up in response. Then there was a period of consolidation through there, breakdown line in the background. 3 weeks ago, the market pushed above that level. This was a likely absorption bar. You got the next breakdown line above through there. And there's where the breakdown line above that is, which frames the market quite well. The market traded within this zone this week in absorption mode as it did last week. So you've had 2 bars now that are effectively absorbing supply from the left. That leaves the market in a pretty good position to issue a challenge to this breakdown line in the background if the trading conditions continue to be favourable. If trading conditions aren't so favourable in response next week, you'll probably get a bar like a test for supply, which is really just the market marking time, marching on the spot, allowing time to pass while trading conditions aren't so favourable, and you get a bar something like that, a little pullback and a little recovery by the end of the week. The market's gone nowhere. It's just passing the time. But more likely, if trading conditions are reasonably favourable next week, I expect there'll be an attempt to push higher in response. And I do expect there will be resistance, selling pressure, emerge from the left through there. That may cause the market to push into that zone and then pull back by the end of the week. Just back to the parent index quickly to finish. You can see the weakness that emerged last week, the push higher and the poor close on pretty strong volume. And in response, the market's come back. It's tested for supply. Volume has reduced. There was a mid-bar close, and the market had a narrower spread than the previous bar. And that suggests that some buying support did emerge this week, and there was an attempt to support the market. And you've got the highs of the range through here. This market's well placed now to attempt to push higher next week and perhaps up to the highs of the range. If there was really serious weakness emerge on overseas markets or the uncertainty continues, a test for supply is most likely, where the market pulls back and then closes back at that level, which is the market pretty much just absorbing supply, marking time, waiting to see what will happen. Lows of this mini range come through here, intermediate level through there, and the lows of the actual range are there. You can see how that market's framed up. It makes some sense, and I expect the market will either attempt to push higher if trading conditions are relatively favourable, or the market will consolidate in this level and probably close up high in the range, because sentiment has been confirmed to be reasonably positive. It did look a bit iffy here, but this week's trading does suggest that the market still believes there's a future in the near term, and I expect the market will attempt to push higher this week to some degree. Okay, thanks for your time. Back again next week. See ya.